took 2 weeks to rule on the Dinges motion. Kellerman Allen, he stayed the state court case waiting for the federal judge to rule. The federal judge ruled in favor of the fund. Now he's got, essentially both cases are combined, and he's got a lot of paper in front of him. So he's pretty good. I would expect at least by year's end.
Okay.
Michelle?
The premium tax distribution update, I sent a email to the city, apparently several checks were released to the city by the state. We hadn't seen a deposit yet, so I'm monitoring that situation, and we'll let you all know as soon as those checks have been deposited into the pension fund. I put a copy.
5 days?
Supposed to be within 5 days, yeah. They received those letters from the state are dated October 9th. The mayor's signature is October 22nd.
I have a comment on that. That's what I think I comment on. The city made a large payment to rid itself of all of that too. I know because we've had a police meeting since then, I know that on the police side, some of the money that the city made lump sum payments on their plan included some of the state money, some of it didn't. So I'll be working with the admin to figure out exactly how much of the within that amount, what would have been the employer's share of the chapter money for some of those years, but we think not for all of it. It appears on police that the city owes them back the money for 2018, which is the most recent payment. I have a feeling if their accounting is done the same, they're gonna owe us back the 2018 money. Now, ultimately, it will turn into a city contribution, but we're supposed to have the cash so that we can invest it. So what it's treated as is a prepaid. It's as if like you prepaid a mortgage. So that next year, when the city's annual employer contribution would be due, whatever money is to their credit with regard to chapter money just comes off that. They don't get credit for the earnings, the fund does. But in the end, the more the fund earns, the lower the city contributions.
So their credit is only a portion of this 175?
That's what we think,
Okay.
yeah.
And we don't have any, we have a ballpark figure as far
I
as
don't,
the percentage
because,
we're looking at here?
no, because I have to get with the actuary and do the account and have to see what the accounting is, because that lump sum payment didn't tell me on its face
Yeah, what was?
whether it was just past employer contribution plus interest, or whether it included within that was their anticipated portion of the chapter 175 money. So I will find out, we'll report back we don't have a meeting in December, correct?
Correct.
We'll report back, I'll report back in writing to the administrator as soon as I know the answer, and she'll advise.
Would it be safe to assume that it would be consistent, whatever percentage is?
I have a feeling whatever they did on the police side, it's likely what they did on our side.
Okay.
So if that is the case, they'd owe us the 18 money, which is 1.467. In which case, they gotta write you a check for that.
And what's the time frame on that? Again, like you said, we're,
Well, as soon as I know as soon as I know how much, if any, of that, it's about $7 million.
Yeah.
How much of that 7 was actually included in their lump sum payment, then we'll, you obviously give them credit for that, but anything that isn't, then the city would owe us the net. And we've already informed the city, write us a check for all of it.
And
That's where,
we'll give you the credit.
that's where we got back some comment that says, maybe it's the other way. So that's only some of it they owe. So we'll figure out the accounting and advise.
Bob, what do you think something like that'll happen? Because it is something that's stirring up in the city right now. Yeah, I know you can't tell me tomorrow, but.
I learned about it, Monday.
So I understand. I'm just saying, like, within a month.
Oh, I'll know before the end of the year. I mean, this is it's a day with the actuary to figure it out.
Okay, thank you.
And then maybe just.
And, obviously the city seemed to do the right thing here, so by catching us up. So I will also be speaking to them, but I need to see how they did their accounting. Okay, as of now, we have a demand for $7 million to them.
But if there's a credit to the city, you're saying the best, or one of the ways we would handle it is basically just apply that credit to
Well, they have to give it,
ARC.
if some of that money is not part of their contribution, they're required by chapter one seventy-five to give us that money. Now, to the extent it would be reflected in a future contribution, when that contribution's due, it's as if they prepaid.
Of course.
And so, instead of owing 10 million, they'd owe 8.5 million, so. But all the cash is supposed to come here, because you're the custodians who have to invest it.
Okay.
I know that Dave Williams from Hollywood Police has been on the phone with the division, and as of yesterday morning, and trying to rectify the 1.7 on our 185 money, so the division's aware.
Yes.
Michelle, it's back to you, unless there's anything else on that.
Not on that, no.
Michelle?
The fiduciary liability policy, I did get a quote for that, and, it is $1,100 more than last year, the annual premium. So this year, it goes up to $37,871. It does expire on November 25th, so time is of the essence. I need you guys to tell me to bind the policy, and we'll wrap it up.
We looked at it,
And they-
motion would
yes.
be in order to.
No reason not to.
No.
You sure? All right.
It was reviewed by the plan attorney.
Any questions, Derek, Chris? Chris makes motion to approve, Derek second, all those in favor of approving, the adjournment? Say aye. Aye. Opposed, none, motion passes.
Got it. Couple things that aren't on the agenda, I just wanted to let you know about. I'm working right now with the retiree, with the HR regarding the retiree open enrollment. Apparently, there's quite a few changes with their health and dental. I'm working with them. They'll be effective January 1st, the deduction changes. Hopefully we'll get all that information done in time so we don't have to do any adjustments in their pension checks. Markham, CPAs are a firm that is, working with the city, and they've requested in the past, quite a bit of information on the drop loans, so I worked on getting all of those documents to them. They've come back and asked for more documentation, and this time the actuary is gonna have to provide that, so that's something that's ongoing. And that's it.
Are we?
Oh, and then I'm sorry, the educational opportunities, yes, are listed out there in your agenda packet.
If I haven't already told you, the Orlando one, sign me up for that one. They're all Orlando.
Got a question.
No, but the.
No, the Winter Trustee School, yeah.
Yeah.
Michelle?
Yes.
Markham, is that the forensic audit? Or what
Yes.
is that?
The
And
forensic
they're-
audit that the city has,
And they're requesting more information on the drop loans?
this time it's not the drop loans, I sent them
you
everything on the
able to
drop
watch it now?
loans. Now they're asking for all of the drop accounts, all information on the drop accounts.
All right.
And we
Michelle?
let you know that we're
Okay.
interested in said education at this time, or just let you know later? or-
Yeah, you can just email us like you normally do,
Okay.
and we'll get you all registered and whatnot, but I'll go ahead
We still
and
gotta
let
do
them
the
know to
hotel, right?
register you for the Winter Trustee
We
School.
still gotta do the hotels, is that, right?
No.
We
Yes.
do the hotels, okay. All right.
Nope.
Anything else, Michelle?
That's all I have.
All right, under old business, adoption of forms to drop administrator rule.
Nope.
I think that we all.
Motion to defer would be in order.
Want to make a motion to defer?
Sure.
Derek makes a motion to defer. Is there a second? Chris makes a second. All those in favor of deferring on the adoption of forms to drop administrative rules, say aye. Aye. Opposed? Passes.
Is there a quick question on that? I know we have the admin rule in here and everything like that. I know there's been some things that have been brought up in the past as far as some like minor editing, I guess, that needs to happen to it.
Best thing would be just email me your written edits.
Okay.
And I'll make any fixes.
That's all I got. Yes.
Payroll growth assumption discussion.
This is something that you all asked me to put on this meeting's, agenda. When the actuarial evaluation was passed, you guys voted the idea of lowering the payroll growth assumption by 0.5% every year, and you just wanted me to put it on the discussion, so.
So I actually have a comment on that. There is a provision in chapter 112 that says that your payroll growth assumption for your, and within, it's one of the assumptions in your actuarial evaluation, cannot be greater than the 10-year average, except if the actuary says it's reasonable for it to be something else. there don't seem to be able to read the grandfather clause clearly. And we're hopeful of resolving, but right now Gainesville Police and Fire, which is actually bigger plan than this one, we're having that issue. And the division is withholding the chapter money. So they may issue, we're expecting them to issue what's called a notice of final agency action, meaning if you don't like our review, sue us. And then there's an administrative proceeding that follows.
So you're basically telling them to lower.
So basically, somebody else is gonna be paying for figuring out the approach on this. So we'll keep up, since we're handling Gainesville, they did it for both their general plan and their police and fire plan. And we're handling both cases, so keep this on the agenda so that I can give a status report to the board.
Do we
Because
know
it's
what-
gonna impact yours.
Do we know what our 10-year average has been, looking back? Do we know that
It
number?
should be in the valuation.
You're saying if we're compliant or not compliant in our career?
Well, I think that the city is actually the one who balked at lowering to.
Oh, yeah, of course, because it increases the contribution.
Right, because it would increase the contribution, because even though it's counterintuitive, the
Yes,
payroll,
long-term, yes.
steady payroll growth
Yes.
is good for the plan.
Yes. Well, like I said, I know we've discussed about the merits of this particular issue and how it obviously long-term saves the sponsor money to have a lower payroll assumption growth, but we're also sensitive to the impact that faces on the budget short-term.
Yeah.
As far as our ARC, so that's hence.
The
this
division,
incremental
the division has
approach.
indicated willingness to accept, if you come to the right spot, they're willing to accept a phase-in.
Okay.
So the question is probably with regard to Hollywood coming to agreement on the resting place.
Yeah.
If, with Gainesville, they just gave some whopper pay increases on the public safety side.
Mhm.
So that's probably where the dispute is, because it's gonna push their 10-year number up considerably beyond where the state thinks it should be. So,
But I mean, does the actuary need us to, we haven't made an official decision, I guess, as far as giving a direction, as far as what payroll growth assumption figure to use for next year's valuation?
Well, I think the actuary should bring it to you, and then when you adopt the valuation as a whole, it's good. I mean, it's your job statutorily to adopt the assumptions, but as a practical matter, it's appropriate for the board to rely on the math done by the actuary. You either have confidence in them or you don't. And if you have confidence in their calculations and they're compliant with the statute, then it's appropriate to adopt them. But the plan sponsor, even though you don't have a fiduciary duty to them, is our partner in the ultimate success of the plan.
Yeah.
So it's appropriate to involve them in those discussions. And I would actually recommend that a discussion be started with the division about it, with the city and our actuary together.
But I know historically, I think from our last experience study that was done a couple of years ago, it was brought to our attention for the actuary, his recommendation was actually 0. And then we kind of adopted the 1.5 because we were at 3, we kind of met in the middle. Obviously, there were some issues with some valuations in the interim, and it raised some issues, and then, so we stayed at 3, but then we've kind of adopted this philosophy of maybe approaching that 1.5 incrementally over the next few years by 0.5%.
Well, that's why I'd like to really recommend, and if you'll just, we'll take responsibility for following up with the actuary and the city and the state to see that that there's an understanding before you're brought the valuation.
Okay, which would be, I guess, March, I guess?
I think you usually get it in the spring, March, April.
Yeah, okay.
Okay.
And then there's the back and forth about payroll growth assumptions.
And Gainesville will probably be resolved by then.
So we don't need to take obviously any action today on
You
this
do
particular
not.
issue, it's just, we're gonna have to make a decision whether or not to adopt the change by March. roughly
Correct,
next
and
year.
that's one of the
And by then,
reasons-
we'll have this information from Gainesville.
That's one of the reasons why I came today, is because I knew about the Gainesville thing, I knew this was one of your issues too. And by the way, this is an issue for about 100 plants in Florida.
Okay.
So,
All right.
Here's I think that's the right number.
This is average over 10 years. So, and the language you're saying, as long as our payroll growth assumption cannot be higher than the average 10, so I understand.
It's not, it's supposed to be equal to or lower than
Okay,
the 10-year average.
correct.
Of actual payroll
I got it,
growth.
yeah.
Unless unless
Unless
the
the actuary
actuary
states
determines
otherwise.
that there is a reason, within the realm of reasonable actuarial calculations. The actuaries are bound by standards of practice, and in fact, the academy, which is their oversight, kind of like the bar for lawyers, has been looking at all of the standards for costs for pension, and there's some debate within the actuarial community about what's the right way to do it, because, what's gonna happen in a year or two is all the events of financial urgency are gonna drop off, because there'll be more than, and then you'll look at a different 10-year period. Whereas if you looked at the 10 years that preceded, like from 2000 to 2010, payroll growth was much higher. So when you have anomalies unrelated to the management of the plan, they still have an impact on the plan. So that's why I believe that flexibility is built into the statute.
But it appears as of right now, we seem to be compliant with that language anyway.
The state hasn't said anything about it, so that tells me that you're compliant. If they thought you were non-compliant,
Even with that anomaly, quote unquote, dragging that percentage rate down, we're still compliant.
yes, you are.
So.
You are. I think what the state looks for is reasonableness, and, I mean, because they're Florida-centric, it's a Florida agency, they're well aware of what happened to everybody in Florida in 2009 and 10.
Alright, next item, the pending final calculations.
I'm just wanted to make you all aware that we're still waiting on the final calcs to be done. The 300-hour overtime rule is still in discussion. So there's 42 people waiting on their final calcs.
Is
The
that
ones
something
that,
that we have to wait until January to resolve?
Yes. The labor and management are speaking, because there's some dispute between, we're bound by whatever they bargain. And I understand there are some talks underway to turn 300 hours total to 300 hours per year. 300 hours total is compliant with the statute because it's lower than the max. But as, but you're allowed to bargain as long as you don't exceed 300 per year. And I understand there's discussions between labor and management now. No action by you is required. The administrator just wanted you to know there are people who have retired, and they're working off of an estimate using 300, and if in fact it's resolved to be 300 per year, those individuals would be receiving some retroactive
So at a minimum, the people
pay
are
and drop.
receiving, at a minimum, the people are receiving that.
Nobody's being overpaid. If anything, these 42 are either being paid the right amount, or depending on the negotiations with the union, will then be entitled to a catch-up payment. I worry much more about overpayments than,
Correct.
underpayments are easy to fix, overpayments are.
So everyone's getting their benefits deposited or
Yes,
cashing their checks, whatever,
and it's
nothing's being held up.
It's in accordance with what's in the labor agreement right now. If the labor agreement is modified, then you fix it.
Bob, I'm just gonna confirm that as union president, we are actively negotiating that, that is.
I knew you would.
But I had talked to Stu, but I'm just.
Yeah, I know.
For anyone who didn't know that,
Yep.
Because when it was frozen and taken away, it was 300 hours per year annually, highest.
Correct. And obviously, it was a bitter negotiation, and that's why your neck hurts.
All I can tell you is the same thing I tell everybody in the union, I literally break my neck for you guys.
That's right. Thanks, Brez.
Anything else on that issue?
That's it.
All right. Next item on the agenda, the consent agenda, the invoices for ratification, warrant 62 and 63, invoices for payment approval, warrant 64, and the fund activity report covering October 16th, 2019 through November 14th, 2019. Everyone receive it, review it, questions, comments, motion?
Motion to approve the consent agenda?
Derek makes a motion, Chris second, as far as the consent agenda in its entirety. All those in favor say aye. Aye. Opposed? All right, motion passes. Next would be, we need our,
he can call in, if you want a telephone report by John Finnis.
how far?
I think given the need to use the charts and the graphs that are in it, there's no sin in deferring the report to January. think particularly because you're gonna be having a discussion on alternatives.
I think one of the issues though was the deadline as far as when we had to make that has to be.
Oh, you talking about Entrust? Did you decide did they recommend that you proceed? I wasn't here.
That's what I.
No, he was
hoping
supposed to
hear.
bring, some more research and possibly some alternatives.
If there's a deadline that you would miss, then I would take that report on the phone as far as the overall report, where he's
Said they
gonna
were-
wanna give you a market analysis and your view of visuals is important.
You said they were on their way, or they're just available by phone?
He said 10 minutes.
10 minutes?
And he is available by phone.
Yeah. All right, see y'all in 10
If
minutes.
he's 10 minutes away, you ought to just recess for 10
All right,
minutes.
9:38, recess, 10 minutes.
Was that John?
Oh, did you took care of the invoices, right?
John?
Yes,
Take care of everything. We made a motion for recess, or I can just walk off and nobody can do it.
No, the chair can call a recess.
Recess.
It would take some motion to adjourn.
9:39 recess.
Did you talk exercise your executive power?
Do you need me to stay or no? I mean, I'm familiar with their product, so if you decide to go ahead, contract written. If you wanted, everything's fine. I just don't tell you what to invest in and not invest in, even though I like that.
Hey, Jason, you wanna start signing stuff? Oh, actually, Chris and Garrett, will you please sign that? That's a updated.
It can't be.
It's already over.
Yes. That's why they say, yes, as a guy once told me,
You can actually sign this.
he was very successful investment manager. He was talking about market timers. He said the guy who's a market timer says that's the guy who watches my boat.
Yeah.
You wanna start signing, Jason? Yeah. You got quite a bit. All right, so this is the Article designation.
If there's something that needs some work, just mark it as like scan it to me as a.
Yeah, I already have one marked up.
Oh, great. Then
Yeah,
just
and there's
scan it.
a few minor things, just a couple of like numbers. Thank you.
And despite the rules, that clearly is.
Yeah. All right, so.
So that's actually, that's the main, that's not the, sorry, that's the main one, that's not the, you see what I'm saying?
No. Oh, that's the main one?
Yeah.
Oh,
That's not the distribution address.
Oh, okay. All right, whatever you want to mark up.
Yeah, I mean, I know we've been past it, but I was doing it, first things I wanted to address, if the day of a conference, where we have a competition here, in this venue, that it's the right language, and that's, yeah, I think so too. So.
Good to see you.
Well, so you have a happy holidays.
Thank you.
Hopefully we won't have to see you
Probably.
until next year.
I have four daughters. Wow. Oh, is that titanium?
That part,
I don't know, everybody says that, do I? I guess it's a metal.
Do you have do you need to get a,
I don't know exactly.
Yeah, I don't know anything else about there.
They asked for, like all the drop statements,
Well,
drop statements.
American Express cards company, it sets the alarm off down.
Get it to work? Guess I remember.
It's actually, I mean, when I first took something, it was really
What?
well, now I know, yeah,
I saw it bring almost $3,000. All the new ones you can. All the new ones. You're talking like $500 got a belt. And I've had that. They call it a belt.
Appreciate you.
It's like a pair of jeans.
Yeah, I talked to the union president. Yeah, okay? Yeah, and we'll grab, we're gonna grab.
You're saying we're dead, we're dead.
That's why then it doesn't, it's an MOU that just interprets. There's no voting. That's exactly why I drafted it.
Thank you. Want me to look over your paperwork? Well, I didn't know you guys checked it.
We don't have to.
Do you have this?
Yeah.
You have what? Advance? I'm officially CPPC. I had a little blue ribbon under my tag, it was like, oh, you're a good blue ribbon guy like me. You go to those, seniors at the round table? Yeah, they never, well, Ralphie's starting to do it again. Yeah. Yeah. That's it, man. I'll go. I'll probably come back single, I don't know.
Belt and teeth.
I took my husband's.
My wife would appreciate me without her for that period of time. To go for 10 days. I don't imagine.
Well, we have a lot because like the company. And
Insulated doors look required too, because that's what I
my name,
insulated
yes.
door,
He
and
was-
non-insulated.
We found that very. What's even funnier is, there's a local pizza place that we always order from. And, the last few years, so, I put the phone on speakerphone to order the pizza, and he was standing right there, and it's his phone. And the lady answered, she goes, "Hey, Joe," and I said, "Oh my God, you guys are really friendly, you know?" So now that's his pizza girlfriend. So me and Kim are like,
How much pizza are you?
I know, apparently, every time I come down here, every time I'm out of town, that's what he does. Anyway, that's gonna be my birthday dinner, me and Kim. My colleague's here, Kim, she's our, plan administrator in Tallahassee. And, she was down for my birthday, so I said, you gotta come to Hollywood with me.
Not the lowest level, but like the middle level.
Well, there's not as many. Which is, you know. We come back to the office and I tell everybody stories about.
It's like, oh, you're making it up.
I could have put it in her.
No, they don't wanna come.
Oh, yeah, exactly. I think you're embellishing.
Hi, Tim, you doing okay?
I have one bar done that I want issues, I've been asking for 4 years. Still. So now I'm just gonna email Bob. That's really ready to go, so we have the conversation, basically, I'm gonna told that. That's nice, we need to have the conversation. So I wanna make sure the documents right. And then, you have to
liberal, I can appreciate that. Hear this out in the car.
It's like, listen, once you negotiate, I don't know what you're talking about.
You can never negotiate. And I just leave this in the garage.
Yeah, exactly, yeah, so, anyway, so that's kind of, he's standing on, I don't know, it's like a principle, he's just trying to, like, exactly, I mean, I'd like to be, unanimous, but I doesn't have to be. Technically, I think we have to, anyway, I don't want to do it.
And she's, you know, she's a redhead. You follow me? Yeah.
I was, he's gonna start growing the majority.
The charter, everything, has everything legally.
Yeah, I mean, if it's,
Yeah, it was going his way, all of a sudden, he withdrew from the chamber withdrew from the, because
at
he
that
said,
point, if he knows it's gonna pass.
they had a contract.
Strategic.
Okay. Which
You can
gives
take
$300,000
over
in break.
these-
Which is not easy, I went off the other side. And.
Favor of the retirees, and I could.
And they wouldn't have the.
You know what I'm saying, so I can get that whole like.
Pass that.
Yeah, that's not the right way, that's not the right. I'm not saying you would do that, but I guess, that angle.
You had a big problem with CRA down there.
You know, it's a chess and a checker, you know.
And he was trying to, that's what he was trying to do, what he was trying to do is buy the building and sell it. You know, and you know, had 2, 3 buyers in the herd, more money, cash buy. And they're flipping on, so that started going downhill with him. You know, so anyway, he got this all out of the solar building, much of it should respect. That he was sold, they sold him. And now she's got talks about all these numbers, all this stuff, and she says, I'm just tired of fighting. Well, you sold it. Who's you going to say? Sold it. Somebody named Lori, somebody who's big, you sold it. I'll say it was, but you know, you know,
Be nice, so you come up, for your next one, you do the one in January? FPPTA?
I might.
They kept saying give volunteers.
January 26th. Same thing, Sunday.
They'll help you out medically, but they're not gonna be.
Yeah, me too, man, but you gotta get like in the way to manage.
And how do you do it? There used to be a lot of, yeah.
Nothing at a time, nothing way to do that. And then charter was something. And she got it Thursday off.
I guess it got, that's something I put it on my, you put it on your credit card, nice back in the day, like, oh, something's taken care of.
The Wall Street, Wall Street.
Conference, is that, a lot of these stuff? And how do you do something with a lot of, just automatically?
Every team member. So now that you guys are, membership, you guys are in the law. What are you up to?
I've never been called for that. Think about it. Does the spots, or should be like a Boston Marathon, like if you give it so many times,
Yeah,
you should
but
automatically
I'm
put it
waiting
in
here.
the phone.
What do you have, Harold?
So like, I have been on the board now.
So what I did was.
6 years. Yeah. At least 2 guys would have had it. That's a pretty decent tenure. And for a social job, I mentioned before, you know.
Did you ever hear from
Part-time,
Thomas?
so much for a job, he has to be 25 hours.
This guy right here.
Yeah, you know,
Right.
I'm sorry, yeah.
Traffic? And,
Speeding? All of y'all. All that, and they're supposed to fill in the blanks.
you guys said, just pass it though. He's like, I won't show up. I won't show
Yeah,
up.
now my deadline.
Just so you know, if he wants to vote, this wants to know. Sorry. Hire a lawyer, find out what happened.
And if that's the case, we'll make the adjustments. But for the people who did already make their decisions, they can do that for me. And I can make that effective January 1st. I mean, I sent them everything they needed.
order, it's 9:54. We do have the representative from ANCO here, so, John?
Thank you to the board for accommodating my
Guys, meeting's back in order. Thank you.
So I know we have a lot to talk about, just quickly on, in the big book, since this is the end of the fiscal year here, just want to show you a few things on page 2 of the big book. So if you all remember, last December was the worst December since the Great Recession, so we did not have a good start to our fiscal year. So everything you read in the news about how 2019 has been great, just remember our fiscal year, we started off down, the market was down 20%. Bottom of page 2, just showing you in the dark blue there, the S&P this last fiscal year, despite being down 20%, we eked out a 4.3% return. And then the craziest thing is in the green, the dark green, fixed income got us 10.3%. So whether it was me or John Breath a year ago that said, don't worry guys, we're gonna get 10% from fixed income, you would have thought I was crazy. And the reason for that is if you turn to page 9. So page 9, bottom right-hand corner is the Treasury yield curve. And you can see there we essentially went from the blue line to the green line over the last year. So we all know when rates go down, fixed income prices go up. So from this chart, the Fed did lower rates in October. What they're going to do in December is up in the air. They say it's going to be data dependent, which the market kind of did not like that comment. But I think rates are going to be low for quite some time. There's, I think, $15 trillion of debt outside the U.S. that has negative yields.
Yeah.
So it doesn't make sense. You know, our 10-year Treasury for Germany is negative. So why would you give a government money for 10 years and then they're going to give you back 98 cents on the dollar? It does not make sense. So that's the challenge that we face just with low interest rates being in our portfolio. We need fixed income, but that is a challenge that we face. Page 10 and 11, we have our pie charts here showing the asset allocation. So we have for this plan, $250 million, a very well diversified portfolio with equity, international, and all the alternatives that we have been diversifying with. And then getting right into the returns for the quarter here. So you can see we were up modestly up on page 16 and 17 for the quarter. For 2019, we're up almost 14%. And I can tell you, October we're up about 1.5%, and then so far in November probably another percent, so up 2.5%. But that puts our fiscal year at right around 4%. So I know that's not the bogey we're trying to reach, but from where we started this fiscal year to get a 4% return is quite an accomplishment. On page 17, when I'm kind of going down the lineup here, a few things that I'll talk about. We know GAMCO, which is our value manager has struggled. Growth, those mega tech companies have been doing well. GAMCO doesn't own those. GAMCO also owns small and mid cap, even though they're all cap. And large cap companies have been performing extremely well. And I have news, I'll come back to GAMCO as well. But Westfield's performing well, and then we have the index fund there. Internationally, similar story. At the bottom of page 17, RBC is our value manager, has done tremendous for us the last decade. As you can see all the way to the right. This fiscal year they struggled, as value has struggled internationally. But we pair that with WCM. You can see there for the fiscal year they hit a home run, up 10%, and the market was down 1%. So they do pair well together. Both long-term managers have performed extremely well. It's just RBC struggled during this fiscal year. And then turning to page 18 and 19. So page, sorry, 18 and 19, the next one. So page 18 is basically our fixed income. And all I'll say there is Garcia Hamilton, still a great manager. They trailed a bit for the fiscal year. Templeton, we're slowly getting out of Templeton and PIMCO as we need cash flows and all that. But performing in line with expectations. Then we have our direct lending at the very bottom of page 18, which has been tremendous investments for the plan. So we gave up some liquidity for these assets, for this private debt, and you can see the returns there. And since we put them in 2014 and 17, just great returns, far outpacing just traditional plain vanilla core fixed income. Page 19, you can see our fixed income managers. Again, fixed income, it's not like, if you look at the 5-year numbers for our fixed income managers, you're seeing numbers around 12% a year. That's not gonna happen going forward. So we should expect anywhere from 1.5% to 2% a quarter, which equates to 6 to 8% a year. And our managers did very well for the quarter and for the year. So you can see for the fiscal year to date, Intercontinental was up 8.3, with JP Morgan up 7.57. So both outperformed the index and right in that 6 to 8% range. And then lastly, we have the Timber Fund, which we all know a couple quarters ago we had a representative. They expressed that they have an agreement. We had a 10-year commitment, and they're allowed to do two-year extensions. They extended the first one. So it is what it is. It hasn't been what we thought it was going to be back in 2008, but hopefully over the next couple of years here, we'll start to get more money out of that, and then we'll finally stop having timber in the portfolio. So for the quarter, positive for the fiscal year from where we started. I'm happy we got 4%. When we do our smoothing average, we're dropping off a 1.4 and we're adding a 4. So the experience when Foster & Foster comes and does the valuation is going to be more positive than it was last year. But in the next couple of years, we got some work to do. The next fiscal year we're dropping off as an 8. So far we're at 2.5. So we're working our way there. But yeah, the next couple of years we have some big numbers falling off. But so far, for the next valuation, it's going to be more positive than what we experienced last year. And then I do have the flash with the skinny book here. Again, this is just through October. I know it's pushing on Thanksgiving here, but for the quarter so far to date, we're up 1.56. For 2019, that puts us about 15.5. And then I think what the market's down today right now, but you can pretty much add another percent to that, so about 2.5 so far for this fiscal year. So that's all I have for the performance book, unless there's any questions.
I don't know. Derek, Chris?
Okay, so administratively, I just mentioned it before we reconvened, but we know that GAMCO, great long-term numbers, but recently, especially this past year, has not done well for us. We talked about putting them on watch, not officially, but we're watching them. So actually, Gino is our rep now, Toretto, the old Miami quarterback. Toretto, yeah. Yeah, so actually, on the way down here, I was just talking with him, and we're currently paying, I believe, 75 bips, so 0.75, and they have agreed to drop that to 55. So that's kind of a good faith that we understand why they have performed, and they want this relationship to continue. So they're dropping it to 55, and that's going to be going forward forever. So if they start to outperform again, they're not going to jack it back up. So that's nice that we get a 0.2%, 20 basis bips reduction in fees. So happy with that. So I'll work with whether the attorney or the administrator to get that contract signed again. So we're paying a lower fee, and I do think they will turn around. So we're still watching them, but I believe that with the lower fee, that's great for the board and the plan going forward.
Anything else on this?
Okay, and then so I know last time we had a great presentation from Entrust about their Special Opportunities Fund, and I know when, speaking with the board, the last time we talked about, hey, are there comparables out there? And, there's really not. So I started to put together, a search book that you guys have seen before from our firm. But there's really nothing else out there like it because it's, kind of private equity and it's, hedge fund, it's a combination of both. So there really is not a comparison out there. What I will say is that, the fund, it is approved by our firm. We do have other clients that are in it. And as I mentioned at the last meeting, the reason why this board has never kind of, entertained that idea, it's just because of the drop in money and we didn't know how big this fund is really gonna be. So, when I'm looking at our private investments, right now we probably have 15 to 20% that is illiquid. So and that's on $253 million. I like this idea, the first thing, and just the board has to know that if, we whatever the dollar amount that we commit, that if more money goes out, that 15 to 20% is gonna jump to 30% of the fund that's illiquid. So if the board is comfortable with that, that's fine. Just know that is a
What's
possibility.
as far as recommending how much percentage-wise to get illiquid versus liquid, what's the ratio? Does that put us in?
There's no, it's all what, honestly, what you guys feel comfortable with. There's no silver bullet. Just know that right now, let's just say we're at 20% illiquid. And if events happen that the fund happens to shrink and we make a commitment to another illiquid fund that, that number jumps up to, 30, so.
Does that put us in any kind of, in a danger zone?
It shouldn't, it's just that whenever.
Without being able to predict the market.
Yes, and then, and if we have a pullback again, that makes that number larger, because when I have to raise cash for different reasons, I cannot take it from 20% of the fund. We just can't, so I have to take it from the liquid parts, which, if our overall fund shrinks a bit because money goes out, that number's larger, and I have to take it from the liquid parts of the fund.
But as far as you can see, this won't put us anywhere near danger zone as far as liquidity.
I do not foresee that. And then so that part, if you guys are comfortable with the liquidity part, we love private investments, and I think that that's where this fund needs to go to achieve the rate of return that we need to achieve.
I mean, what type of, capital rate are you recommending if we were to go this route? Again, because I'm looking at just some of the alternatives we have right now. 2% is roughly $5.5 million. We're talking, 5%, cause you're just going 20 to 30% is a 10% jump as far as asset,
Yeah,
That's
so.
a pretty significant number,
Yeah, so, I would reference, our private debt with Crescent and LBC.
Yes, that's
You know,
what I meant.
those are both, I believe they should be around 2.5.
Yeah, it's
commitment.
4.2 combined into of the overall asset. That's what I'm looking at right now.
So LBC, percent wise?
Yes,
so-
like 5.7, 5.9 respectively.
So 5 million, let's just say 5 million is 2.5%.
Yeah.
With the interest fund, they showed you the book last time, and it's a great story, and when they mentioned special opportunities, right, they're providing liquidity, so this fund will be giving liquidity when there's market dislocations. You can see from their first fund that happened in 08, 09, when they started, the world was going to hell in a handbag, and you can see the IRR in that was tremendous. The Fund 2, again, very strong returns comparable to what we see. Then Fund 3, though,
Not so much.
there has not been the market dislocation.
Yeah.
I believe net of fees return, our IRR was 1,
Yeah.
which is similar to what we've experienced with timber.
Yeah.
I will say that clients that have this with us have been happy with the experience of
I
Fund
got it
4.
earlier though.
Well, Fund 4, so Fund
Okay.
3 is,
I gotcha,
and they had some Argentinian bonds and a few other things that caused some, but there really has not been a dislocation, which is why that fund is lower. When I view this, I do not want to do 5% of the fund.
Yeah,
The 2.5 is
I was
fine.
thinking more around 2% figure was like, reasonable amount, but that's what I'm asking your.
Yeah, so if the board wants to continue with this, I view this as we're committing to private investments. Now, this Entrust Fund 4 Special Opportunities, they just happen to be closing December 31st. So that's why if if the board is comfortable with private investments, let's make a commitment to it. And if Fund 5 comes out, great, you know, we can re-up in 3 years again and, you know, make a 5% commitment to this private special opportunities, whether it's interest or somebody else. But, you know, for December 31st, if the board is comfortable, you know, I would not, it'd be around the $5 million mark.
Yeah, yeah, exactly.
Which I'm thinking of.
Yeah.
And recognizing that we commit 5 million, even though they're closing December 31st, you know, they're not taking it all right away.
Correct.
So that allocation will ramp up. But I really, if the board, I really would like a commitment that we like private investments. You know, John and I both do, and we think it's appropriate for the board. But this is gonna be a program going forward where, yeah, we're gonna commit some money here, but we're also, you know, in the future, we're looking at, hey, every couple of years, you know, we're adding to this exposure, you know, and keeping it consistent.
Yeah, because I mean, I definitely share the concern as far as the illiquid type of investments, you know, what percentage of our overall fund is committed to those kind of investments. And then also, this private debt, private equity, which seems to be trending right now. Just doing a little more research because I think there's maybe some cause for, you know, a little more scrutiny maybe, I guess, as far as, you know, it seems to be like the new trend, but, you know, that has been, you know, going on for that long, whatever. It just, a little bit of education I'm, you know, getting at, you know, these conferences that talk about this kind of stuff, you know. There's some, I'd say cause for concern, but just, you know, a little bit of apprehension maybe as far as this getting too far to the extreme, I guess, into this particular sector, I don't know.
Yeah, so,
And funds in general.
so unlike Crescent and LBC, which is private debt,
Okay.
this fund, they will own some private debt, but it is special opportunities.
Okay.
So they had a nice pie chart in the presentation. They're also activists. You know, so whether they want to get on the Ford Motor Company board or, you know, a bank board, you know, that's why it's hard to categorize it because it's opportunities. And wherever they see opportunities, you know, that's where it is. You know, so, like I said, this fund is approved by our firm. We have other clients in it. The experience for Fund 4 has been positive. You know, so I don't want to have it be 5% of our fund if it's 2.5. You know, I think that's okay. You know, but it's really what you're comfortable with. You know, we don't have to do Fund 4. I'm sure they're going to come out with a Fund 5. If you know, we want to wait to see this liquidity potential problem that we have to see where the fund is actually at. But Pramal Trust is a reputable firm. It's approved. You know, so you know, that's kind of, it's really what you guys are.
Well, I mean, I think if we're doing like a 2% commitment, it's not a huge impact to the illiquidity.
It's not, and,
You know what I'm saying?
I'm sure Jeff can talk about it, but they're not taking it all right away either.
Of course,
You
yeah.
know, it's gonna, so during this time period, as, let's say Pramal Trust Special Opportunities 4 ramps up, technically we should be getting back the timber over this next 2 to 3 year period. So, you know, that was always, the goal was to get out of the timber, you know, so this could be kind of replacing that. You know, so at the end of the day, they need opportunities. Fund 3 did not have the opportunities, which is why the net IRR was 1%. If there's opportunities out there, these are the guys that are gonna use our money to provide the liquidity for them. You know, so it's approved. If the board's comfortable with it, you know, I would stick around the $5 million commitment mark, which is gonna be about 2%, which essentially is our timber commitment. And I think over the next couple of years, what we get from timber should kind of offset that.
Yeah, it doesn't lock us in as long as timber review.
It doesn't. It's still gonna
Potentially
be
it could be,
okay.
it was pretty long in the tooth as far as potentially holding on to the investment money for a while.
It could, yeah.
In the presentation, I remember, I didn't go up to like, because I think it was, I don't remember all the time, but whatever the line in the sand was, you go, I guess, 8 years out, I think, from that point, whenever they start working with the money.
Yeah, so for, they've been raising money for a couple of years now, so, people that committed, you know, their time frame was probably 10 years. I remember the 8 number as well, or
Yeah.
7 or 8, so.
Yeah.
We just had, if we do this, it gets in at December 31st, and we're in there, and then, you know, essentially 7 to 8 years commitment there.
I got you. I mean, I'm kind of comfortable with the 2% number as well. I mean, as long as you're like, you know, your recommendation is, you know, kind of consistent.
I didn't,
with that, you know what I'm saying?
my recommendation is that it is approved by ANCO.
Yeah.
And the biggest thing is, the board has to be comfortable with, I know it is 2%, you know, of 100%, I know, but, just comfortable with the illiquidity of adding to the portfolio with the potential that we don't know what's happening with a large chunk of the assets going forward.
Hence, the small, I guess, allotment relatively speaking to the funds overall.
Yeah, and then also, I would like, not a commitment, but we need to start discussing that we're gonna do this. I want it to be a program.
I got
You know, that going forward, we're always talking about it, and, whether it's Entrust 5 or, some other firm, we're always, so we're diversified, so we don't have all of our eggs in one basket. It's a program that we're continually, over the next, decade here, we're going to be.
Well, I guess we're gonna need a lot more education on this particular asset class of investments as well. This is what you said you want to continue to go.
Obviously, so right now,
Yeah.
obviously, we don't have handcuffs on, chains on us right now, but the December 31st is for this fund. That's my biggest thing, is that over the next years, it's a commitment that we're making, that we're adding, the good thing though is that, with the, timber that's gonna roll off here, in maximum of 3 years, we have another 2% of our fund that's gonna be.
2.5, yeah.
That we can, allocate more
The
efficiently.
6.7, I guess, tied up in it right now.
Yes.
So I'm talking about allocating 5, so it's more or less a wash. So I think it'll be okay. Yeah, I think I'm okay with the 2% allotment. Do you guys have any comments or thoughts on it?
I don't have any other questions, you guys covered everything. All right, so then a motion might be in order.
Let's say 2%, just wanna do 5 million.
Fine, yeah, whatever's easier math-wise.
I think
yeah.
5 million is.
5 million is
Because,
fine.
the fund fluctuates.
Yeah, I think it's like 5.04 million or something,
Yeah,
that's
yeah,
2%
so
right now.
five is
So
a
5
big
million,
round
just match
number.
round number, that's fine. Then, I guess I'll make a motion to, I guess continue, or
Commit to the fund.
commit to the Entrust fund that was presented to a tune of $5 million for our assets.
Second. Derek makes a motion, Chris second, all those in favor say aye. Aye. Opposed? All right.
Alright, so I'll work with, the administrator, and Michelle and, Jeff as well to figure out what we need to, and the attorneys. I'll let them know.
To draft the contracts and everything, yeah.
So, I guess we got a month to get it done, so.
Yeah, we'll get the docs to,
I know,
Mr.
don't get it.
Bowser's office.
And then, sorry, the last thing I know, we gotta get out of here, but, we did have another, capital call from, our private debt managers. So I'm working with, Michelle on that, it's due the 25th, so it's the 21st today, right? So,
Monday?
Monday, yeah. COB on Monday. No, so, we'll get that done, I'll probably work on it, later.
Yeah, all
this
day
week.
tomorrow, right? So it's plenty of time.
Right.
All right. Anything else for John?
All right, thank you for your,
Yes, yeah, sorry,
Yes.
take it. Drive safe, get home.
Good luck.
going 70 with the cruise on.
65.
That's slow.
Yeah. Not, Palm Beach was 60. These trustees discussion, anything else on that? Eric, I got nothing, Chris, I got nothing, Wilkie, just to make sure.
Right,
Exciting.
that's
The next would be if somebody wants to make the motion.
Yeah, motion to, I guess, next month's meeting is January 30th, correct?
The next meeting is January 30th, that's correct.
I'll make a motion to adjourn.
Derek makes a motion.
Happy holidays, guys. Thank you.
Adjourning, say
Happy
aye.
Thanksgiving.
Aye. Opposed?
Be safe.
Unanimously passes 10-17.
Hold the fort down.